Why don't we start here? My name is Travis Hoyam, and I'm the creator of the Rive Project, where you're watching this right now. I'm really interested in looking at disruptive companies, and so that's why these three that are reporting right now, PayPal, Block, and Coinbase, are really interesting to me because there's a lot going on in the fintech space, and then crypto brings in Coinbase as well. So that's kind of my interest for today, is seeing what the momentum is here. And obviously, if you're a new business and you're starting something, new, innovative, creative, PayPal and Block are kind of the go-tos, right? So hopefully it tells us a little bit about what's going on with small businesses too, because I think that can be really telling. John, you want to give us a little bit of background on who you are and where we can find you?
Indeed. Yes. Hi, my name is John Quast, and I like to jump on the Rive project with Travis from time to time. I am a contributor with The Motley Fool, and I write a lot for Fool.com. That's kind of my intro.
And you're going to be starting, we're going to get you on YouTube here one of these days.
Yeah, it's coming along. Very soon, very close to launching.
Before we get these numbers out, and I don't think that I'm refreshing pages as we go, but I don't think that any
Block
of these
has reported.
Block reported. Okay, let me refresh that. What are you looking for from Block?
Well, the driver for me here for Block is the Cash App ecosystem, and so that is the thing that I care about the most. Now, granted, the Square ecosystem, that whole, what you're referring to, the small and medium-sized business category for them, that is very important, and I'm not disinterested in it. But for me, the consumer-facing Cash App ecosystem is probably the main pillar of my investment thesis with that company. Now, I would like some clarity regarding their futures with cryptocurrency. That would be very nice.
TBD, XYZ, whatever that's called. Yeah.
That doesn't cut it for me. I would love clarity on that, but main thing I'm looking for is Cash App.
So, and just to kind of define what that means, Square is going to be what businesses use. That's what you actually are swiping on. I was at a Subway today and they used the Square app. I think because their main payment system was down, but that is something that's very common, is for businesses not only to use that as their payment processor, but then the thing that I'm specifically looking at in that side of the business is the subscription revenue, because that's what, if you're going to use their calendar or their payroll infrastructure or, any of the kind of about 24 services that they have, that's where that's going to show up, is on the subscription side of the business. And that's a little bit more, I think, sustainable and profitable for them. The problem with the payment side is the way the margins work in that business, it's not Square that's making most of the money. It's actually Visa and the banks that are making most of the money on the payment side of the business. So that's sort of like it's like the razor, and then the razor blade, where you actually make the money, is in providing these services to businesses that are really critical to them actually operating. And the reason that, this is a valuable company is because all those things kind of work together. And if I only have to build my kind of small business infrastructure on Square, that's way easier than bringing in, 15 different apps. So that's kind of the background there on the Square side of things.
To your point, Travis, you noted today in a Fool.com article, I did check that out, talking about the whole slowdown of the global economy and how that's weighing on investors' minds, because that does impact the payment volumes. And to your point, the payment volumes come and go. That can fluctuate wildly depending on what the economy is doing. But if you are in that business's crucial needs, if you are that provider, then you do earn that subscription revenue, which is much more stable and, like you said, much more appealing. That payment volume, it's important too, but that's irregular.
Yeah, so let's go through Block's numbers. I think they do a nice job kind of giving us what has happened over the last 4 quarters previously to this current quarter. So gross profit up 38% from a year ago to $1.57 billion. Net loss, which is smaller than any of the last 3 quarters. I think that's really interesting. This is going to be another one of these Silicon Valley companies that as we kind of made this shift from grow at all costs over the last, I mean, almost decade really, to, oh my gosh, we actually have to make money. What companies are going to be able to make that flip? And so this is, I think, pretty encouraging. Adjusted EBITDA, $327 million, significantly higher than both last quarter and a year ago. So that I think is pretty positive there. And then you were talking about the Cash App. Cash App gross profit up 51% from a year ago. What are your thoughts on kind of these early numbers here?
Yeah. I mean, come on, if you can sustain 51% gross profit growth in a side of your business for any length of time, that is going to be a meaningful driver of the stock price. It really will.
Yeah, I totally agree there. All right, so here's the high level numbers, and they break this out into Block as a company, and then Square and Cash App, which are the two main drivers. What I think is interesting from a gross profit standpoint is they're about equal in size. I think a lot of people would be really surprised at that. You know, I'm in the Midwest, and I think Venmo, which is PayPal, that's one we'll talk about in a little bit, but that's much more common here. I prefer the Cash App, but you know, you do get a network effect with these payment solutions and these peer-to-peer solutions. But Cash App got a massive market, and they've built a huge business in this that's generating almost as much money as Square, which is kind of shocking if you aren't a big user of this app.
And I'm drilling down into these numbers a little bit more for Cash App and looking. It says that they had 59 million transacting actives in September, so users essentially of the Cash App, and that is up 20% year over year. So that's really meaningful adoption growth there.
Did they have their customer acquisition costs? Because I know they've covered that in the past, where the numbers are kind of crazy. It was something like your customer acquisition cost was like $5 or $10, and the gross margin per customer is like $50 a year or something like that. I mean, it was one of those businesses where you go, oh my gosh, grow this as fast as you possibly can. Are they still calling that out?
They typically don't have that in the report every quarter. It's more in the investor day presentations, things like that I've seen it. I'm not seeing it right now. Doesn't mean it's not in here. We're getting this fresh, but yeah, it's something along those lines. It's around $5 to acquire a customer.
Here is another, I think, telling number for this. This is kind of going to give you the trend of what our business is doing. This is the Square GPV is gross payment volume, and 2020. It's interesting. The pandemic was actually pretty bad for Square because if you think about their business, yes, it's a digital business, but it's oftentimes a business that you're using in person. You're not necessarily. This isn't Shopify where you go out and build an online store and then people are going to interact with you only online. It's more so something that really caught hold at taco or food trucks and, you know, real small business, like, you know, fireworks stands was always one that I think it's like that doesn't exist without a company like Square. So they took a bigger hit than you might have thought in the early phase of the pandemic when a lot of their customers had to shut down. And then it's been kind of a slow crawl back. So I think this is really interesting that a year ago, $41.7 billion in gross payment volume, and now they're at $50 billion. And then they break this out here, 125,000 or less in annualized gross payment volume. That would be what they kind of consider their small businesses, up pretty significantly, almost $2 billion to 15.8. And then medium-sized businesses growing pretty nicely, up $2.2 billion. And then where they've made huge inroads over the last couple of years is with bigger retailers. And that is up, $4.4 billion to $19.9 billion. So that's becoming a bigger and bigger piece of the business, which I think is really interesting given the trajectory that Square's on.
Yeah. So to answer your earlier question, Travis, I do see here that it says Cash App marketing expenses up 5% year over year. However, we just noted that there was 20% year over year user growth. So to me, that's a nice in the right direction number there.
Yeah, that's phenomenal. Here's another one that I think is, again, these are just I think I have no idea what the market is doing or how it's reacting right now, but gross profit in markets outside the US, this was always one of the criticism of Square, is that it was a very US centric company.
Yeah.
And gross profit, look at this, goes back to 2018 and just steadily growing up over 100% in the past year. So I think that's a pretty good sign for where the business is growing, where they have the opportunity to grow, because it's not just everywhere, right? If you're an established business, it's pretty challenging to change payment systems. But if you're starting a new business, that's where they're going to get a lot of their customers, and then you can move internationally. That's another place for them to grow.
Mm-hmm. Yeah.
Do they even mention Bitcoin?
Yes. So they took a $2 million impairment loss on the Bitcoin because they do have some on their balance sheet, I guess you could say. So with the value of Bitcoin down, you do take that impairment loss.
All right, here's the next thing that I want to highlight, and I brought this up a minute ago, but that is the subscription and service-based revenue. Again, this is where Square is really going to make their money long term. This is businesses paying for different services, typically cloud services that tie into the Square app. And so this is a recurring, or literally as it's called, a recurring revenue source. And this is what makes small businesses go. Revenue in 2019 in the third quarter was $99 million. Now we're up to $332 million. So since the pre-pandemic, this business has more than tripled. That's a
wow,
pretty massive growth number. And then on the bottom here, it excludes PPP forgiveness and other contributions from buy now, pay later. On that basis, it's more than doubled. So I think, transaction volume can kind of tell you the direction of the business. Is it growing or is it not? But like we talked about, it's not necessarily where the profit's going to come from. This is where the profit's going to come from. And so I think this is a really good trend for Square to be showing right now.
Not sure if you froze up or if I did, but
I still see you, John.
All right. You there?
I'm here.
Okay. I'm looking here down in the Bitcoin revenue. I know that we're going to talk about cryptocurrency here in a moment, but it looks like Bitcoin revenue only down single-digit percentage, maybe 1%. It's not very much on a year-over-year basis. Now, of course, if you are familiar with Block, they're not making any money off of Bitcoin. They're just facilitating the transaction. But still, that's interesting because that says that roughly the same amount of Bitcoin transactions right now as there was this time last year, which I don't know what that means for Coinbase, but that's an interesting data point.
Yeah, and they've always been really interesting in how they report their numbers, because Bitcoin, the way they aren't facilitating a transaction between third parties, they're actually taking custody of the Bitcoin. So if you are buying Bitcoin from the Cash App, you're actually buying it from Block. So they're recording it as revenue, even though the margin that they're making is like tiny. And so that's why you'll see it's been really confusing the last couple of years, because it'll be like $4 billion in revenue and gross margin is like $10 million. So,
and it's why you can't really look at Block on a price to sales basis,
right?
Because how much of the sales is just Bitcoin, which really isn't material to the business at all. So you look at it and it's like, oh, it's trading at 1.5 times sales. Okay, well, yeah, don't use that metric in valuing Block.
All right, what are your? I'm gonna look up the stock, what the stock has done after market. I like to look at these before looking at the stock. What's your reaction to what we've seen from the earnings report so far?
Happy. Yeah, more business as usual. I mean, I'm used to big numbers in the gross profit growth. I'm used to, I mean, yeah, I should be really excited about 51% or whatever it was growth for the Cash App ecosystem. I feel like I'm a little bit muted because I've come to expect something comparable there. It is a fast growing piece of this business.
Yeah, what's interesting here is this stock is down, is it 80%? I mean, it's down a
From its all-time
lot.
high?
Yeah.
Sure. Yeah, absolutely. Yeah.
Um,
I think it
but
was pushing 300 at one point.
yeah, but if you look at the business is still doing really well. And this is where I think we're in a really confusing place in the market where stocks are down, and so then that makes investors just generally think the sentiment is down in that business or the market that they're in. I don't see anything terrible about these results. If you were just flown in and said, "Hey, look at these results," and have no context about what's going on with the stock price, I think you would say, "Hey, this is a great company. They're growing like crazy. I'm in." And
Yeah.
yeah, it looks like stocks up about 12% after hours. This is one of my biggest holdings, so I'm happy to see that. But I'm happy to see the momentum in the business. I think is the bottom line.
Well, and I think to your point again, I was just reading Morgan Housel this morning, The Psychology of Money, and one of the things he says in there is we prefer simple narratives because sometimes the details are just too complex and we don't like that. So we prefer to tell these simple stories to explain what's going on. And oftentimes, like you just said, the stock is down 80%. What's the simple narrative there? The simple narrative is, oh, Block must be failing in some way. We don't prefer to dig down into the context. And yeah, if you do, it tells a quite different story here with Block. This is a stock that I just added to last month. I just increased my position by 33%. So it is one of my largest holdings as well.
Nice. Yeah, I think a lot to like here. And the surprising thing to me is that the Cash App is still just growing like crazy, and then it's almost the same size from a gross profit standpoint as the Square business is, which has been established for what, a decade now.
Yeah.
So I think that's really encouraging. Now we'll see what the conference call they say on the conference call, but how they're integrating buy now pay later, and then some sort of crypto TBD something or other. Well, that's where the next leg of growth might come from. Can they somehow use crypto rails instead of credit card rails to lower their transaction costs, maybe increase margins per transaction? We will see. That's kind of to be determined. But right now, I think a lot to like about this stock.
Yeah, it could be the next growth driver. It also could be the next metaverse, right? And just this big distraction and money dump when you have this really great thing going somewhere else.
Yeah, absolutely. All right. Well, thanks for covering Block's third quarter earnings instant reaction. Let's move over to PayPal. If you want to pull that up, looks like they net revenues was $6.85 billion, up 11% on a currency neutral basis. Operating cash flow of $1.9 billion, growing 29%. I'm just kind of going through these highlight numbers as we get these earnings per share. Now, this is a company that you would expect to be more profitable than Block. And so I think that's one kind of distinction there, because they're a little bit more established, a little bit of they've been less in growth phase and more in kind of increasing that margin phase of their business over the last couple of years. Although maybe they've still been growing really nicely. Yeah, what are you seeing from them here?
Well, so they did in the last, let's say right after the pandemic started to focus on all these other things, and their free cash flow, while they are very still much generating a lot of free cash flow, their free cash flow took a decent hit, especially in 2021. I think that was way down for them historically on a margin perspective. And I'm looking right here. It says that they generated 1.8 billion in free cash flow for the quarter. Now that says it's up 37% year over year. Granted, I think it was muted last year, so the growth rate, take it with a grain of salt, but still 1.8 billion in a single quarter for free cash flow. That is quite significant. And that to me is something that I really like.
Total payment volume, and again, we just talked about Block and their Square app. I'd have to pull the numbers up again, but growing really, really well. They had total payment volume growth of 9%. So in the single digits, not in that double digits. Again, it's not quite the same growth company that Block is. So that's something to kind of just weigh as an investment. You would maybe weigh these or value these companies a little bit differently depending on whether you're focusing on the bottom line or the top line. So I think that's something. Financial guidance. They did issue guidance for the fourth quarter of 2022. Net revenue expected to be around $7.375 billion, growing 7% on a spot basis and 9% on a currency neutral basis. So again, this isn't a 50% growth company. This is a high single digit growth company, which I think could be fine in fintech. But that's kind of what we're seeing there. Anything else that popped out here to you from PayPal?
I'm still looking it over, trying to see what's going on here. I did see up here the 8 to 10 million net new active accounts. That's for the full year, and I don't quite remember if that's an increase or a decrease. I can't remember off the top of my head what they had been guiding for. Strategic initiative business updates. Yeah, fantastic.
And they aren't reporting anything with, I know they've started to move into some crypto transactions and NFT sales and stuff like that, but we're not talking about a meaningful piece of the business like Block, like the Cash App is, or we'll talk about Coinbase in a minute. But that's not a meaningful part of the business for them. So, and I think that is maybe one of those things where maybe that's okay. This is more of a legacy company than the other two. And I don't know, maybe they don't even need to get involved in that. Just kind of do what you do. You're making more money than either Coinbase or Block at this point. So that's probably not a bad thing.
Yeah. I'm seeing here that some partnership with Apple here for its merchants, for the merchant base customer, the merchant customer base. There, I finally said it. So what do you think about that? Leveraging Apple's tap to pay on iPhone technology. I think that was already the case, but soon be able to. So basically going with Apple for the hardware, whereas Block kind of has their own stuff, but it looks like they're just going to team up with Apple to provide these kind of services to their merchants.
Well, hasn't Block announced something similar? I'll have to look this up. But yeah, I do think the idea of having the tab, I mean, I think the PayPal one is a triangle, right? And the Block one is a square. That's kind of outdated technology right now. What we're moving more to is just tap your phones together. If you're a fireworks merchant, who's just open for 1 month a year, you don't want to buy a whole bunch of infrastructure. You just want to use your iPhone or your iPad. So I think that both of those companies are moving towards that.
Yeah, I mean, it would make sense. That's where the market's going. Let's see here.
I wish they did a better job of laying out their business over time, because they do this where it's just kind of year over year numbers, but a lot has happened in the last 4 years in this space. So I don't see anything surprising from them, from PayPal. I'll look at what's the market's reaction here.
Not liking it.
Down 8%. So I think
that's going to be an all-time low, or not an all-time low, but a
recent low for sure.
5-year low, 6-year low. I mean, it goes back a ways since PayPal was trading in the 60s.
Yeah, I think you're right. You're talking about 2017. It's interesting because I think as we were going through the Block report, there's just a lot of eye-popping numbers. It's big double-digit growth. okay, the Cash App's growing, payment volume is growing, subscriptions are growing. And then you look at PayPal and you go, this is fine. High single digits. There's a lot of companies that would love to have high single digit growth and really strong free cash flow. The market does value growth, though.
Here's an interesting number. I finally found it. 939 million in share repurchases in the quarter. So about half of their free cash flow for the quarter went to share repurchases. And I think that has to be a large part of your investment thesis. If you're investing in PayPal, it's not going to grow the way that Block is right now. I mean, unless something happens that we just can't see right now, but its business as it is right now, it's not going to provide the Cash App type growth. And so you have to start thinking about shareholder returns. How is the company going to use that free cash flow? Because you can destroy shareholder value by not properly allocating that money. And you can be a market beating investment with share repurchases and that kind of thing. It's just a matter of how you're going to play your cards.
Yeah, I've always liked just pay a dividend rather than buy back stock. Because the other thing that a lot of times what companies do is they'll basically buy back enough stock so that they're not so that stock options and RSUs that they're giving to employees are dilutive. And
that's a fair
you suddenly
point.
look back in over 10 years, you've repurchased $200 billion worth of stock, but the share count outstanding is flat.
Yeah, the same. Yeah. I think that they had somewhere in the ballpark, I just saw it. I think somewhere in the ballpark of 200 million. Yeah, 226 million in stock-based compensation for the quarter. So to your point, yeah, call it a net 700 million repurchase.
Here's one thing I wanted to highlight here. Total payment volume. Am I in the wrong one here? I am.
Yeah, it's Q2.
I was going to look at the payment volume versus, here we go. So the total payment volume, $337 billion, growing 9%. I think Block's numbers from the Square side of the business was not pulling out foreign transactions. So on a equal comparison basis, they're going 9%. Block grew 19.9%, so growing twice as fast. That's, I think, what investors are probably thinking about with their reaction right now is how do you want to value a company that's growing far more slowly than Block? Because eventually that becomes a real problem. If it doesn't take very long to growing at 20% versus 10% for a company to just kind of get inundated. So I think that's something I would think about if you're a PayPal shareholder. I think I have a smaller position in PayPal than Block just because I haven't liked the business as much. But it's a very different growth story. This is a cash flow story. So now are you going to have to start valuing this business based on free cash flow alone and not on growth? That could be problematic.
So I did a little bit of math based on where the stock is trading after hours, based on their free cash flow in the third quarter. Now, I don't know if that's something to be expected going forward, but let's say that they were to generate the same amount of free cash flow for the next 3 quarters. They are trading at 11 times their free cash flow, their free cash flow run rate. How about that?
Yeah,
that's fairly cheap.
That's pretty cheap. That's I think what we're going to see here is the market over-indexing on one way or the other, right? Mm-hmm. It might be, hey, we're under anticipated how much companies are going to grow, and maybe even I was looking at Meta today, and if you just look at, if they just nix their entire Reality Labs business, I really think that stock could double.
Yeah,
because they're making so much cash from their core business. So yeah, there is going to be kind of a bottom there for some of these companies. If you start trading for 10 times free cash flow and you're an established business like PayPal, there's a lot to like there.
Yeah. I mean, especially, right? I mean, investors hate uncertainty. It's okay sometimes to buy a PayPal where you're like, you know what, it's not going to knock the doors down, but I'm going to be able to sleep owning this company in my portfolio. I know it's going to be there
Well,
for a while.
exactly. And they have ties to eBay. Look, eBay is still around. Like
I like
it
eBay too.
it didn't become Amazon,
Yeah.
but it's still there. It's still a good business. There these businesses that have two sides where you have a merchant side and a buyer side. They're really
Yeah.
sticky. They're really, really sticky. And the thing for PayPal is if even if new merchants are choosing Block in the Square ecosystem over PayPal, that doesn't mean that their old merchants that are already on the platform are going to move, because the payment rails it's still credit cards. It's still the internet. It's
Hmm.
still none of that stuff is changing. It's not like they're getting disrupted by Block. Block is just growing more quickly. So yeah, I think that probably is the takeaway, is that this is a company you're going to want to look at their free cash flow, and that's how you're going to evaluate. It's not going to knock the doors off with growth, but I mean, hey, high single digits for a company growing or trading at 11 times free cash flow, hey, that's pretty solid.
Indeed.
All right, any final thoughts here before we move on?
I'm surprised by the market reaction. I would figure that the market would react more meh than have a sell off, but that's just me.
Yeah, this is one I'm gonna have to come back. I'm gonna have to come back to PayPal over the next few weeks and just kind of rethink what is an appropriate price to pay for a company that is making a lot of money and maybe isn't growing, maybe isn't a real exciting business, but it can just be kind of a rock solid piece of your portfolio. Because
Hmm.
I do think we're going to see a lot more deals like that. So yeah, I wasn't excited by the results. I guess I'm not surprised the stock is selling off. It seems like, unless you're really reporting phenomenal numbers like Block did, the market isn't going to have a lot to like there. But I also wouldn't be surprised if the reaction when the market opens tomorrow isn't quite this dramatic.
Yeah, that's fair. What was it? What stock was it today? Roku. Roku was down. What was it? It was absurd, like 24% after hours yesterday, and then it finished the day down 3% or somewhere thereabouts. Peloton as well. Peloton was down like 20% after hours yesterday and finished up for the day.
Oh,
So
did it? I didn't see that.
last I looked, it was up a good 3-4%. So the after hours reaction is not necessarily where investors are going to land with their feelings.
Yeah, that's 100% true. All right. Well, let's move on to Coinbase. I'm gonna pull this up and we're gonna go through this live because I think this just came out in the last few minutes.
Yeah, I haven't looked at anything yet. I just pulled it up myself.
Here is their they do a good job going through the metrics here. Monthly transacting users, they were expecting this to be down from the second quarter, so 8.5 million right there. Transaction volume, this is where they end up making their money, is on volume on transactions. So that's down again. We're down about a little over 50% from a year ago. Hang on here, John, if you want to take over for a second.
Yeah, sure. So let me look at what you've got pulled up here. So yeah, trading volume down, and so that is kind of a little bit surprising there when you think about it, because as we noted with Block, the Bitcoin revenue was fairly stable, and maybe there's something with that I'm missing off the top of my head. But yeah, the noting here, trading volume down about 50% year over year, thereabouts, and the assets on the platform. Wow, that's a big drop from last year. But
But it's
again,
up.
the
It's up
value
from
is
the
way
second
down.
quarter.
Yeah.
And this is going to be both the value of the assets that people have. Like if you had one Ethereum on Coinbase a year ago, that Ethereum is worth 60 or 70% less now. So
Yeah.
that's gonna show up in their assets on the platform. Revenue, $576 million net loss. Net loss was down. I think that's encouraging. I think it was in the second quarter was when they announced the layoffs. They cut headcount by a pretty significant amount. I think it was 20%. And that will take a little while to push its way through the income statement. So the fact that net loss is coming down, I think, is a good sign for surviving this crypto winter, which is really all that Coinbase wants to do at this point.
Check out the subscription and services revenue.
Let's see.
211 million, up from 147 million in the second quarter.
And that, I believe, they did give guidance on that. I'm not remembering it off the top of my head, but that is a surprising jump to me.
Yeah, they said that their outlook here was modestly higher quarter over quarter. But let me pull this. I'm doing the math real quick here. Let's see what that actually is. Yeah, that's a 44% jump quarter over quarter. That is not modest.
And that's key. Quarter over quarter. This is not annualized growth. So that is pretty significant there.
And that's the bear case against Coinbase, right? Is that these transaction volumes are going to continue to fall and they're not going to have a business. Well, maybe they can have a business if they can develop a suite of products and services that they can sell on a subscription. And we're seeing, wow, that's actually starting to really take off.
Yeah, I want to come back to that, but I do want to highlight these two numbers here. Transaction expenses. So this is the expenses for their transaction business. They guided for low 20% range, which is about where they were in the second quarter, and it was at 18%. So that tells me that they got really aggressive in cutting costs, and it's already starting to make an impact on the income statement. So that's really good. Sales and marketing expense, 141 million last quarter, guided for approximately 100 million. Actuals was 76 million.
Wow.
This is one of the things I've written in articles on Fool.com about. Sometimes Brian Armstrong, it's like you can just read the transcript or listen to their conference call, and he has such clarity about what the business is, where it's going, and how they're going to get there. And it seemed to me when they made the cuts that they did, when they did, he was kind of like, hey, we've been through this before. Crypto is going into a, what we call crypto winter, and we got to get out ahead of it. We want to be survivors so that we can thrive when we get to the point we're at now. I'm looking at NFT marketplaces, and OpenSea is the only one that still has a transaction fee at this point. OpenSea is going to need to sell because they're not going to be making any money eventually.
Right.
Magic Eden's in the same boat. Who buys them? Well, Coinbase is kind of the only company with money right now. We've seen recent speculation that we don't know what FTX's balance sheet looks like given the leverage that their trading arm, Alameda Research, has. So it's not exciting to say that you just want to survive if you're Coinbase and kind of keep slowly adding products that are going to eventually be, the search engine or the email that, Google built. But that's really what you want to do, is like survive and slowly build over time. And it's, this is surface level here, but I think they're really doing that. And their expense cutting is just incredibly impressive to me.
I don't want to jump too far here, but on page 7, this is the most eye-popping number here for me so far, and I can't believe I didn't think about it. They made over 100 million in interest income for the quarter.
Because they have something like $6 billion in cash on the balance sheet.
And I didn't even think of that scenario with the interest rates going up.
Yeah.
They're earning a better return on that, and all of a sudden, 100 million? Come on.
That's a lot. The other thing, this does not include much impact from Ethereum staking. That started in mid-September, but Coinbase is one of the biggest staking platforms. So basically, when a customer says, hey, I want to stake my Coinbase or stake my Ethereum on Coinbase. Coinbase says, okay, we'll do that for you. We'll do all the legwork. We're going to take 25% of that revenue, and then you can get 75% of that revenue as basically a yield on that staking.
Right.
So that is not playing a big role in their income statement yet, but I think it will. So I haven't been able to find those numbers yet, but that's another thing to kind of put a pin in that, even if nothing else changes, the operation should get a little bit better from that alone.
Mm-hmm.
Yeah, that's a good point, John. That's something I hadn't thought about either. $100 million in interest income. Let's go back up to some of their transaction volume, because I think this is always interesting. Retail trading volume down a little less than 75% from a year ago to $26 billion. That's not real surprising, given the fact that retail traders have kind of exited the market in a lot of ways. Institutional holding up pretty well, though. They did sign the deal with BlackRock this most recent quarter, so they're going to be providing a lot of the infrastructure to banks and investment institutions who are trying to get their customers into crypto. So that's going to be, I think, a bigger piece of that business. It's not real high margin, but again, it's going to be sticky, and it's going to be really big numbers.
Right. And it is something that I would consider of a moat for Coinbase. Mm-hmm. There aren't many companies equipped to offer what Coinbase is offering to that class of person.
Yeah, that's 100% right. And there's security piece of it too. I think, every time I see them announce one of these deals, it just makes me more and more confident that they have the best security in the industry. Mm-hmm. And as we move forward in crypto, I think we're already seeing this now with something like the Reddit NFT launch, but everybody's going to be interacting with the blockchain in one way, shape, or form, and they're probably not even going to know that it's happening. If you saw that Reddit NFT, people were just buying a profile picture, paying for it with a credit card, and then it was in their vault. Well, that vault happens to be a crypto wallet. And so it was on the Polygon blockchain, and you could go sell it on OpenSea, but people didn't even know that's what they were getting. So I think that's going to become more and more common. And if you're a company who sees this as a potentially big revenue stream, or, in addition to your business model, who do you go to? I think Coinbase is a natural partner, whether you're using their cloud services or their, MPC wallet or what have you. So I do think that's where that subscription business, I'm going to have to dig into that more, and I'll listen to the conference call and probably write about that and cover it in the next few days. But I think that is going to be something really to look for over the next few years, is how many more of these institutional corporate customers who are coming to crypto with maybe less of a degen mindset and more of a, hey, we want to build a real business here, that we see cost savings, we see benefits to blockchain technology over having info in a database. Whatever their angle is, they're going to be looking for companies to kind of do the stuff they don't know how to do. It's like AWS, hey, we don't want to build our own servers. Like, we don't want to have a server farm. Snap was built on that. Like, cool, you'll do all that stuff for us. Great. We'll just pay you for what we use. That's going to be, I think, the case with the blockchain as well. A lot of companies are going to be really interested in this, and they're just going to go, hey, there's a whole bunch of stuff we don't want to do. Let's do the thing we do well. You do the thing you do well, and we'll pay you for it. So I think that's the way to look at Coinbase.
Yeah. Here's my hot take here. I don't own Coinbase, even though I have followed this a lot. There was a point, I don't remember where it was, that I finally said, you know what, this might be worth a small position, because I think that it is, if crypto succeeds as a space, I think that Coinbase is a necessary winner. Mm-hmm. But I still haven't owned it personally. And I'm looking at this report and I'm thinking to myself, I think that we're really near a bottom in terms of the crypto bear market. Not to say that it won't go on for a while longer, but I think that in terms of the destruction that has happened, I think we're near the bottom in that. And looking at this report from Coinbase, I am saying, wow, this is actually pretty good numbers considering the time that we're in. Is this a buy heading into the next bull cycle of the crypto market?
And their results are their upside is so asymmetric too.
Yeah.
I think that's the other thing that is difficult to wrap your head around is when you get into something like the blockchain, you build this infrastructure layer, this protocol layer, and then it's just there and you just generate revenue off of it. And this is a company that could really be kind of living off of what they're building right now for the next decade. And I think that's always something, disruption is always easy to see in hindsight. But I think that disruption is happening today in the crypto markets. And one of the things that I'm just going to be blunt in saying it, Coinbase is like the adults in the room. They're not saying, hey, we're going to add a bunch of derivatives contracts that you can trade. Great. Or, here's some arbitrage opportunity that we made a bunch of money off of. They're saying, here's this real infrastructure thing that we built. I keep going back to the MPC wallet. Like people who have the Coinbase app probably don't even know that they have a wallet that will work on multiple blockchains just on their app. It's just sitting on their app. And that's something that Coinbase shares that security with you. So they're abstracting away these complicated security features. That's incredibly valuable for the future of the blockchain. It's like making email easier or writing a web page easier. The companies that did those kind of things made a lot of money over time. So I think that's kind of where we're at. Anything else that popped out here? I'm gonna dive through a couple more of these. I did want to show the cash walk. So I'm gonna pull that up because I think this is a company that, again, we're talking about building for the future, but you got to survive the today. And so this is their Q2 to Q3 cash changes. And I'll see if I can zoom in here a little bit more. $6.2 billion in cash at the end of last quarter. They had an operating cash flow loss, some minor changes in M&A investments, CapEx, things like that. Net equity transactions and another $140 million. But you're $5.6 billion in cash on the balance sheet, even after this recent loss. So that's a lot of money, especially when their cost trajectory is coming down. This is enough to make it through a few years if this crypto winter lasts. So I think that is another thing to keep in mind if you're looking at this company.
I think that one potential out of nowhere thing could be their goodwill. So I'm seeing over $1 billion of goodwill on the balance sheet right now, up about 400 million from last year. So,
and goodwill would be from acquisitions that they've made that, like let's say a company has $10 million of assets on the balance sheet, but you pay $100 million for them. You put $90 million of goodwill on the balance sheet because you're saying, hey, there's value here that isn't just cash on the balance sheet, and that becomes goodwill. And then what oftentimes happen is companies will write that off in kind of bad times, and they'll often have like a really bad quarter where they'll just go, we're going to write a whole bunch of stuff off.
Rip off the Band-Aid. I like that approach. Get it out of there, and we don't have to worry about it going forward.
Well, and the other thing that I will look at here over the next couple of days is their venture arm is another really interesting piece of the business that doesn't get a lot of value from investors because they're putting money in, seed, Series A, Series B kind of companies. But if any of those companies hit, that can be suddenly a big chunk of money that comes to Coinbase. So it's another point of leverage long term. Again, I think Coinbase is the kind of company that if you think the blockchain, crypto, Web3 is a big piece of the future, then Coinbase is, I think, one of the best ways to play that. If you don't, then stay out of it. It's I think that's simple. But, as we've been talking for almost a year now about crypto, I think this is one of the companies that is building really interesting things that are going to be probably behind the scenes to a lot of people. Maybe trading isn't the future of their profit, but they're kind of the AWS where you go, everybody's using Coinbase products, they just don't know it.
Yep.
All right, now it's time to look at what the market thought. Coinbase down 8% during trading today, up 4% after hours. Not a big reaction. Near their low at 55.
Yeah.
It's been lower. So, yeah, I guess it's been in the 40s. So, what do you think? What do you think, John? Is this the kind of company that you're intrigued by, given the asymmetric potential return of this investment? Or are you still going, hey, you got to prove it to me?
I think that Coinbase has proved it to me. I think that the crypto space still has stuff to prove to me.
You're questioning the macro more than the
exactly
Coinbase specific.
I'm with you. I think that this company is in many ways the adults in the room. I know that there has been criticism of the management team for a lot of things. Some of it very well founded, and other things I think that are a little bit blown out of proportion. But overall, I do think that this is the adult in the room. I think that this is an investable company in that sense, because they are real adults. I do question the space, but man, this is interesting what they have built so far, and especially how they have managed during what you should expect from a cryptocurrency company periodically, right? Going back 10 years now, this has been a cycle up and down. And if this is how they are in the down cycle, it could get worse, but let's assume that we are there at the trough of the bear market. If this is how they are right now, I feel really good about the next bull run.
The other thing that's new in this crypto winter into potential next bull run is a lot more corporations are really interested in figuring out this space. And I think that's going to be the big difference. Is it's not going to be the Bored Ape Yacht Club, going up 1,000x. That's going to be the thing in the next crypto cycle. It's going to be, what are we actually doing with this that's meaningful and valuable?
Yeah.
And I think
it's going to be Starbucks launching an NFT loyalty
Yes.
program. It's going to be, like you said, BlackRock working with millionaires to diversify their assets. It's going to be all those kinds of things.
The Reddit NFT, 3 million new wallets in like 6 days.
Yeah.
We don't even know exactly what this is going to be in the future, but I do think there's going to be this infrastructure layer that's going to be very, very needed. And Coinbase is one of the leaders in that infrastructure layer. So even if you put away their transaction business, I think you pointed it out. The subscription growth is incredible on a quarter-over-quarter basis, over 40%. And now they're generating a ton of money just on the cash that's sitting on the balance sheet too. So
so they're counting that cash they're counting that interest income in the subscription number that we looked at the beginning of our talk.
Oh, are they?
Yeah. So, which is kind of surprising. Yeah. So if you just look at custodial fee revenue, that's broken out. That's down on a year-over-year basis. Other subscription and services revenue is up on a year-over-year basis, and up very sharply quarterly or quarter-over-quarter as well. But the big driver, that 211 million number, which was up 46% or whatever we noted earlier, the big driver there is the tripling quarter-over-quarter of the interest income.
I'm going to pull this.
And the 13x.
Pull this table up here so that we can show all the numbers. So blockchain rewards. This is where staking is, right? Is blockchain a reward?
You've pulled up Q2, yeah?
I did it again.
What was your question?
Blockchain is staking in blockchain rewards or custodial fees. That would be blockchain rewards, right?
Yeah, blockchain rewards. I do know that they make. Yeah, that wouldn't be there. Never mind. I think it's what you said.
Yeah. So this is a number I think will go up pretty significantly next quarter when Ethereum staking is a bigger piece. But okay, yep, interest income. I see what you're saying right there.
Yeah, it's up 13x year over year. That's incredible. I had not considered that. So that's something to look at. Cash-rich companies right now. I mean, we just raised another 0.75% yesterday. Cash-rich companies all of a sudden saying thank you very much.
Yeah, that's very true. All right. Well, I think we both kind of have a similar takeaway here. The stock is becoming, I think, attractive. The downside is not nearly as big as it was when the company went public a little over a year ago.
Mm-hmm.
And the upside is still pretty tremendous, I think. But again, it's a little bit like the analogy I always use is it's like Google's identity solutions, the sign in with Google, a bank, and AWS is kind of what they're doing in this crypto and Web3 space. And with especially AWS and Google, when they were building those businesses, you couldn't point to, here's the thing that they're going to be in 10 years. Because nobody knew where it was going. Nobody knew exactly what the products and services the market was going to demand, what you could do from a technology standpoint. So that's the other thing that's, I think, really interesting here is you could look at the numbers all day. You could build models all day if you want. You just have to trust that management and the people that are working there know what the market is going to need and they're going to build the right things. I think that they've done that over the last 3 or 4 months with what they've introduced. And so that's what I'm going to continue to look at is are they building really valuable infrastructure things that abstract away the fact that people are even interacting with crypto or the blockchain. But it's kind of where my head's at. So I'm staying in. I'm maybe not buying more now, but we'll see. We'll see where we end up. So update us if you decide to join the Coinbase shareholder club.
Yeah, definitely. Yeah, I'm glad that we talked about this because I hadn't looked at Coinbase in a little bit.
Yeah, well, interesting quarter. We will take a little bit more time to digest this. You know, as the name says, this is our instant reaction. So there's oftentimes a lot that we hear in conference calls or context that comes out that is maybe clarifying. So, but I think overall, I think the Coinbase numbers were pretty good. I think the PayPal numbers were okay. And maybe this is a compelling value stock. And Block, I thought they were great. Do you have differences there, John, with what you were thinking for the quarter?
I think that Block was what I expected. PayPal was about what I expected. Coinbase was surprisingly better than expected. All
right. So not a bad day in the fintech and crypto space. I think that's the general takeaway. Yeah. This could have been, if these were bad, I think the market would have. These are well-known names, and the market would have really been hit hard tomorrow. So maybe it won't be a bad day tomorrow.
Here's hoping.
All right. Thanks for joining me, John. Let us know when that YouTube channel is up. Please follow the Rive Project. Yeah. Give this video a like. And of course, share it if you found it interesting. We'll have another couple of videos up breaking this out, and a video and articles up on Fool.com as well. So follow both of our work there, and we will see you all around here next time. Thank you.